Hey, good morning, everybody. So today I'm going to talk to you about my Cardone Capital investment. And a lot of folks have been asking me in the comment section on the last couple videos that I've made about Cardone Capital, hey, when are you actually going to show us some results? And so I didn't want it to just get one payment and say, hey, here's my first payment. I want to at least establish some sort of track record before I get started. Now, whether you say a track record is 6 months, 12 months, 18 months, 3 years, what have you. I have 2 months so far underneath my belt with respect to the payments that I've gotten from Cardone Capital. And so I wanted to share that with you guys and see kind of what it looks like. And there's a couple videos that I've made in the past talking about more about Cardone Capital and what it's all about. But this video specifically is going to be talking about the actual payments, what actually ends up happening when you invest in Cardone Capital. So I believe now at this point that the actual funds may be closed. I believe that there's only two more funds or one fund open at the moment, and you need to be an accredited investor. But to talk more about what I've done here, and you can kind of see a little bit in the upper left-hand corner the capital I have committed, how much is actually invested at the moment, what's actually there in terms of the balance, and how much I've actually received. I invested in something called Cardone Equity Fund 5, and so that was, while I am close to being an accredited investor in terms of income and also total capital, well, maybe not total capital, but with respect to income, I am a non-accredited investor, and so that limited me to specifically being able to invest in Cardone Equity Fund 5. And so what Grant Cardone did and his affiliates, they reached out to the SEC, had them look through the entirety of the companies that Grant runs and the real estate portfolio that Grant runs to see if it was something that could be available to non-accredited investors. So someone like myself who makes under $200,000 a year and has under $1 million worth of capital. And so what I actually did was I had around $15,000 worth of Realty Income Corporation stock, and I sold that and then took that money and invested it in Cardone Capital. Just because I thought it would be interesting to, one, see if it worked, and then two, create videos about it for others to learn about, and then three, diversify away from actual stock certificates and stocks themselves and REITs in the stock market and invest in a private REIT, something I had never done before. And also because it kind of locked in my position for 5 to 10 years, and so this $15,000 is going to be something that is invested for 5 to 10 years, and it's not something I can buy, sell on the stock market. Not saying that either of these is the best way to go about investing your money, but it was something that was not necessarily keeping me up at night, but I was thinking a lot about, and so I invested my money in Cardone Equity Fund 5. So to date, you can see, albeit probably a little bit small, so let me zoom in here and zoom down. You can see distributions, and so I've invested my money in late May, I believe, so it took all of June, and then the beginning of July I was physically invested. So I started technically owning the real estate in the July timeframe. So from July 1 to July 31st, I was actually invested. And so on the 5th, the company actually takes payments from the rent of July, and then on the 15th, they pay it out. And so for me, I had about $15,000 invested in the month of July. And so if you actually take out a calculator, we can calculate how much I actually received. And so for the month of July, I had $15,000 invested, and for the month of July, I received a payment of $56.25. Now, to some of you, that might be a lot. To some of you, that might be very small. So let's make it pretty simple. If you were to take $56.25, multiply that by 12, it's around $675 per year. And if you were to divide that by $15,000, that's 4.5%. To some of you, that might be a lot. To some of you, that might be a little. But to keep in mind, this 4.5% that I'm receiving could go up, could go down. It really all depends on what the company is cash flowing. One way to look at it is I now own 2 properties, or maybe up to 4 properties. I'm not exactly sure, but I own a portion of those properties. And if the real estate then, if the rental income actually goes up, I actually get a portion of that. So this could go up over the next 5 to 10 years, depending on if we hold the real estate itself. But at the moment, I've basically provided the $15,000 for the affiliates to purchase real estate on my behalf, whether or not they buy, sell, or what have you. But in the meantime, I'm going to own that 4.5%. That 4.5% gets directly deposited into my checking account, one that I use to send the money to these to the affiliates. So that $15,000 came out of the checking account that I had, and now the $56.25 or the monthly distributions go in to my account. And the same thing happened in September. So in August, I owned from August 1st to August 30th, and that $56.25 came in September as well. So they collected the rents for August on the 5th, and then I got paid out on the 15th of September. So hopefully this is going to continue to happen over the coming months, and I'm not exactly too sure, but they've also recently purchased the other 2 properties and split them amongst Equity Fund 5 and Equity Fund 4. And so I'm not sure if this is actually going to increase or decrease, or if my portion of the investment is going to stay relatively the same. But this is specifically just from the cash flow on the property. This isn't taking into account capital appreciation, depreciation of the actual assets themselves. And so one of the things that might actually end up happening, and I'm not saying it's going to, is I actually own a piece of the real estate. So since this is a partnership and this isn't specifically a stock per se, this actually can get depreciation towards my name. And so what that means is, of the $15,000 that I've invested, I might be able to write off a decent portion of that. And with that being said, if you own real estate, you get to depreciate the actual improvements on the land. And so of this $15,000, let's say $12,000 of it is actual physical improvements on the land, so the buildings that are on the land. I can depreciate 3.5% of that per year, around 3.5%. You can depreciate that $12,000 over 27.5 years or 28.5 years. I forget exactly what it is, but that ends up being close to 3.5%. So if you were to say take that $12,000, depreciate 3.5% of that every year, that offsets a lot of this $675 every single year that I'm going to be getting in cash flow. So that means I might not necessarily have to pay taxes on this entire $56.25. It's only a portion of that. Maybe it's $30, maybe it's $40 that I actually get to write off. So I'm really only paying taxes on, say, $15 to $20 every single month that I get this, if that makes sense. Hopefully it does. And if you're a finance person, you're probably following along pretty well with me. But if you're not, I completely understand. It gets quite complicated. But also, if this building were to, say, appreciate 10, 15, 20% in the next couple of years and they decide to sell, I also get a portion of that. And so that is where I'm hoping it actually comes in. So I'm hoping, while I'm getting paid 4.5% of my money due to cash flow, I'm also hoping that capital put into the property increases the value of the property. So this is a little bit different than some of my other investments where I'm strictly looking at cash flow and strictly looking at the dividends that come in every month. What I'm looking at now is if we're able to, say, improve the property and actually increase the cash flow coming from it, or if we're actually able to improve the actual value of the property through appreciation, whether that's landscaping or improving the kind of classification of the property, whether that goes from a Class B property to a Class A property. And so not entirely sure how this is really going to work out, but I figured I would share this with you now that I've gotten 2 payments under my belt And there's some other videos that I have with respect to Cardone Capital that actually talk about what properties I'm invested in, one of which is in Sugar Land, Texas, and one of which is in Delray Beach, Florida. And there's a couple other investments. I think one of them is in Austin and another one, but I'm not exactly sure if I actually own a portion of that. So I'm hoping over the coming months there's some clarity with respect to that. But I wanted to at least log in to my portfolio here, of which I've started to get distributions on, and talk about it a little bit, so that way people know that at least for now it's semi-real. So obviously I've only gotten paid $113 out of the $15,000 that I've invested, but this is one series or one video of many videos in a series where I'll be talking about Cardone Capital with respect to how much I've invested, how much I've received. And so, yeah, at this point, I've received, 0.6% of my investment back, if I'm right. Let's do a quick calculation. Oh, about 0.75% of my investment back. So I've almost received 1% of my investment back. So by no means can I say for certain that this isn't a scam or anything like that. I'm actually receiving payments. And if it was just a scam, I doubt that it would be paying, immediately back. But, lo and behold, I'm still reserving judgment. But this is partially a learning thing for me, a learning thing for you, and I'm hoping you get a lot from this video. At least sparks more questions. It's still new. I haven't necessarily invested directly into real estate before, so this portion of it is a little bit new. Normally I just rely on real estate investment trust, which is somewhat new, or is not somewhat new, but it's still investing in real estate, but I believe it's a little bit more passive than investing in, say, Cardone Capital. With the Cardone Capital, I'm not investing in every single piece of business or every single piece of real estate that is owned by the Cardone Capital Group. I'm investing in specific assets, where let's say if I were to invest in Realty Income Corp, they have 4,500 or 5,000 properties across the entire world. I'm investing in the entire group. So with respect to that, I'm investing in all their overhead. I'm investing in all their other properties. With this, I'm investing in two specific properties, and I know where they are. I've seen one of them. I haven't been inside one of them, but I've driven past one of them, and I know it's there. Other people that I've met when I lived in Houston know the property. They drive by the property. They shop by the property at some of the places that are nearby. So at least I'm comfortable with respect to, I know that these things are real. Not saying that the Realty Income Corp properties aren't, but anyway. So more to come on this. I will keep you guys posted. If there's any questions, comments, leave them down below. And I will be sure to try to answer them. Thanks, guys. I'll talk to you guys soon.